Hey guys, welcome back for another daily cryptocurrency market update, where these updates haven't really just been very crypto focused. What I am going to start doing, and let me know if you think this is a good idea in the comment section, is daily crypto news videos. So we're going to cover everything that's happened in the past 24 hours, all the big news headlines, and give you one short and sweet update first thing in the morning, so that you guys can stay consistently up to date with everything happening within the crypto space. But the reason we've been still very much relating everything that we're saying to the cryptocurrency market is because I believe that there is real danger ahead of us, okay? And I have to constantly second guess myself and ask myself the question, am I just buying too much into the fear side of things here? Or is there a serious issue? And the answer for me is that there is a serious issue. We've said that right now we're still majority cash, even though crypto is seeing a nice little move to the upside. You know, we spoke about key levels. Yesterday we spoke about you stay below 23K. You can short, you get above it, you close the shorts, and you look for the longs. We're literally playing level to level on nice round numbers for Bitcoin at the moment, and you can use your high beta altcoins to capitalize off that. But this is really going to be a video. I want to take us back to a clip from an interview that I did with Francis Hunt, where he's talking about the correlation between unemployment and the stock market, and what this means moving forwards, and where we currently are, because I honestly believe, when I ask myself from an investment point of view, should I be putting money into these markets now? Does the reward outweigh the risk? For me right now, the answer is no. The risk far outweighs the reward. I've worked very, very hard over the past nearly 5 years now to build up a nice sum of capital that I do not want to give back to this market. And okay, maybe, and it's not a very high probability that we've seen the bottom for the cryptocurrency market and markets generally. Maybe we missed the bottom. But I'm okay with that if it shows me that that is going to be the case. Whereas at the moment, I still believe, and it's not just news driven, it's internally driven, it's statistically driven, think that there could be an absolute shitstorm on the horizon. And this is something talking about the labour market. This is Exhibition 19. A layoff mentioned also jumped recently. Companies mentioned of layoffs. And you can see the sheer spike. So you had the March 2020 event. Prior to that, we had 2008. You can see we are now seeing a huge spike in company layoffs. And we've been talking about, this is something we've spoke about months ago, that layoffs are going to start to excel. We're seeing it really amplifying the tech sector. It will trickle down as we have a slowing economy, less consumer demand, etc., etc., etc. Is that the time where markets bottom? We will dive into Bitcoin a little bit, but I want to play this clip and then we'll get into some of the news articles. You also have Pelosi over in Taiwan. Are you trying to poke a bear when you're in a cage with it? You know, let the bear eat its food. You stay to one side of the cage. You let the bear just, you know, do its thing. You're going over there and prodding it with this, what's going on. Like this could be, you know, it feels like they're kind of almost trying to distract people with this at the moment. And we'll cover some comments from the Fed. Also, very quickly, we had Michael Saylor step down as MicroStrategy's CEO. Significant, maybe. We'll talk about it. But really, I want to get this clip played just to refresh everybody with what we were talking about in regards to unemployment. And then we'll relate it back to this chart just here.
This best summarizes my take on answering exactly that question. In other words, do we have more vicious downside to come? And I'm going to share something that shows the unemployment rate. So permission me there, if you will. The white one, and there's a yellow one. The white one is the New York Stock Exchange Composite Index. So it's not quite the Dow. The Dow's 30 equities. This is everything. And so you're starting bottom left on the white, and you've gone kind of to the top right. And then the other line that I just want you to focus on, and then I'll explain my annotations in a second because it's kind of busy and I need to introduce this layer by layer. The other line, the yellow line, is the unemployment rate. So unemployment, that's pretty hard stats. If people are claiming unemployment, it means they don't have a job generally. So what you'll notice is, if I draw with you here, and I'll choose the TG pink and I'll go fat Koki, the low of the unemployment rate roughly over here. There we go. You see me doubling up on it over there. The low on the unemployment rate was pretty much where this green arrow, the high on the equity market, the white line. When the unemployment rate shot up to there and reached a peak and then sort of based for a while and only began to come down from around this point, you are at the lows of the equity market down here where the pink arrow is. So the pink arrows are all the lows of the equity market. So once you had your spike high, but you stayed stubbornly high, and then you properly, the last point before you started to come concertedly down, you came in, that was your bottom of your equity low. So again, if we go again, when was the point that the unemployment rate, that was the absolute low, but this was the final low period before it began a run up. When that happened, the final low period before it began a run up, that was your high of the stock market, 2007. You see it there on the green arrow. Roughly the last low levels before it's had a major move up. When you hit the high on the blues, the blue marks are all the highs of the unemployment. You're essentially at the low point of the stock market. It's not a surprise that these things are correlated, but the highest points of unemployment are going to be correlated to the lows of the stock market, and the lowest points of unemployment are often going to be correlated to the highest points of the stock market. So from there, we had this huge 2009, and we went into a mega reflationary environment. This was QE1, 2, 3, super low interest rates. Unemployment went to an exceptionally low. Bear in mind, participation rate is ridiculously poor now at the moment. But inside of that, which they count within unemployment, we went on the basis that you're comparing like for like to an all-time low in unemployment. You'd never had it so good. I would argue a lot of those jobs, as I say, will be the menial zero contract stuff. But nonetheless, everyone had work 2019. The final low before you started to go up again was actually here. That was the absolute low. But the final low before you started to go up again was here. And you went up in a straight line on account of it being the events of the pandemic. That was your final high as well. End of 2019. By the time the 2020 first quarter started, we were full lockdown and the whole story. Major crash, that's your low of the stock market. That would have occurred at the peak. Now, this yellow line's actually gone off the roof here, just to put some context in here. So again, their actions and their counter actions, if I just clip the highs, this is somewhere off there, and then the lows, you can see this is actually what we call a broadening structure. Their actions and subsequent reactions to events they created are creating ever greater volatility. They are not a stabilizing force. They are a volatility enhancing force, which each shake and pump and dump scalps the retail punter and stacks the chips into the house. So when you understand this, you get a feeling. Now, to take it forward to where we are now, because everybody goes, yeah, nice retro look back at 2007, etc. What does it mean for us today? So what does it mean for us today? Well, where are we today? You've just had another all-time low, 2022, in the unemployment rate, and you've started up. You're beginning that journey up, but you are still very low. This entire range for the unemployment, you actually weren't that low in the 2000s. 2006 was your lowest. It was up top here. And you weren't that low even in the year 2000. So 2002, you've never been that good, let's call it, in terms of unemployment, but you've never spiked so goddamn high in the unemployed. Now, my argument is the next events that will befall us will have to match or surpass the events.
We'll leave it there, guys. You get the picture. We played this clip before, but it's showing that unemployment is very correlated to when you have historically low levels of unemployment, stock market does well. We're now at that turn. We're now seeing the layoffs roll in across the board, not just for the US, for the world at large. And this is a cause for concern. This is one cause for concern. Look at the housing market. Look at the stats around that. Look at the GDP, gross domestic product. Look at that. Look at what's going on around the world in regards to liquidity and global liquidity, not just from a dollar point of view, from a Great British pound point of view, from a euro point of view, from a yen point of view, and so on. It's all getting taken off the table. And you're going to get people calling bottoms in this environment. Have you lost your mind? Have you no understanding of anything other than going, okay. And listen, look, you could be forming a little bit of a base here. For me personally, This is not typical bottoming structure, right? You're grinding up higher on not very impressive volume. Not breakout. You're not seeing your big whales get in and accumulate and your big institutions. You're grinding up here. You're not hashing it out the lows. You're grinding up rather than making these marginally lower lows. You're failing, you're failing, you're failing. Instead, you're climbing, slightly climbing slightly, and then boom, do we get that dip? And we've got indicators that we look at and a number of other things. And of course, for anybody that's interested in joining my Patreon, there's a link in the description. You guys will get up to date on everything going on. We've also got videos out there, altcoins, you name it, we've got it. You've also got Pelosi over in Taiwan. Bank of England essentially it is looking like they're going to do the biggest interest rate hike in 27 years. And you're comparing data from the last Bitcoin 4-year cycle theory to this one. Doesn't work like that anymore, guys. There's bigger fish, bigger forces at play here that we need to try and come to terms with and navigate around. So that's really all I've got for you in this video. I was going to go into a lot more, but the video has gone on for quite a while now. Really, I'm going to love and leave you on that note. This was something interesting to me. This is something that we've said. We looked at it in regards to the tech sector a while ago. The house of cards potentially is now falling. And are we going into a recession? Well, in my opinion, we're already in one. It's nothing new that they changed the definition of a recession. A recession previously was called a depression, and before that, it was called a panic. And they've changed it to kind of, just not quite panic the masses and panic them a little bit less. And okay, it's different this time, it's different that time. It's not a panic anymore, it's a depression. Okay, it's not a depression anymore, it's a recession. Now wondering what they're going to call it. A hiccup, probably, maybe, I don't know. That's all I've got for you in this video, guys. If you've enjoyed the content, a like is always appreciated. So is a comment. Just be safe out there, and ask yourself the question, seriously, from an investment point of view, does the risk does the reward outweigh the risk? If the answer is no, then why are you investing? Let the market show us that this is the bottom and that we're now going to start a bull market. Why would we start a bull market with record low liquidity? The Fed isn't going to pivot just yet. They will pivot, and that's when we get back into markets, but they're not doing it just yet. All I've got for you in this video, guys, also very quickly, look at your open interest right now. Battle taking place. So you've got a nearly 7.5% increase in open interest. Price has only gone up by 1.5%. Absolute battle taking place here between the longs and the shorts in terms of opening futures contracts. All I've got for you in this video, guys. If you enjoyed the content, like as always, appreciate it. So a comment. Check out my Patreon in the description. Also, head over to my Twitter. Give me a follow. We are going to try and produce daily threads. Also, watch out for those daily 24-hour coverage or past 24-hour coverage of all the big events that have taken place within the cryptocurrency market. All I've got for you in this one, guys. Have a good day.